Welcome back to the Aro Benaiah Show, the podcast that celebrates the builders, Swissa, and doers, business entrepreneurs who are turning skills into success and building business that lasts. My guest today is Justin Boy, seasoned financial expert and founder of Board Executive Consulting, with over 20 years of experience in finance and accounting. Justin has served as a fractional CFO, helping home and now helping home service business and turn their financial stress into strategic clarity so they could make confident decisions and grow with peace of mind. If you have ever felt lost in numbers and struggled to balance cash flow, pricing and profitability, this episode will give you the clarity you have been missing. Justin, it's really a pleasure having you on the show.
Thank you. I appreciate being here.
Yeah, thank you. So, Justin, you've actually spent over 2 decades in finance. What inspired you to focus on helping small business and home service business as a fractional CFO?
Yeah, I did spend a lot of time in the corporate world. Before that, I did like personal financial planning for individuals and small businesses, where more on focusing on insurance and investments, actually helping them invest their money, not as much on strategy. And then I spent 11 years or so in the corporate world and learned a lot about forecasting, budgeting, planning, just general strategy, pricing strategy. And at the same time, I was helping a friend of mine actually start a bookkeeping company. He had a finance background. They actually just did like window cleaning. They were in the blue collar industry, but so it was a very interesting thing. But he knew a lot of other window cleaning companies and other blue collar companies that didn't have good bookkeeping, and so he wanted to start that arm of the company and just do the bookkeeping for other people. And so I helped him start that, and just throughout that process and networking with other people that I knew, I just saw this huge lack of financial education for people starting their own businesses, and even people that are up to $5-10 million. They still don't have a great handle on what they're doing. They some of them get lucky, some of them just work, they outwork everybody, and those are all great things. But there's without that knowledge and help from an expert, it makes it a lot more challenging. And so, helping them start this bookkeeping company, they got a lot of people on the right structure, tracking everything correctly, which is definitely the first step of any, financial journey in your company, is making sure you invest in good bookkeeping. You have a solid foundation, where every dollar's going, it's accurate and it's clean and it's separated from your personal finances. But they then didn't know how to answer questions because everything was backward looking. It was, hey, I'm looking backward, and it's too late to change anything with what's already happened, right? And so how do we build upon that and say, okay, what am I seeing? What does this mean? How do I make decisions off of that? And so I really felt compelled to sort of take what I'd been learning and help other, small businesses, give them that financial education, give them those headlights, give them those tools and things to think about, and help them through that decision-making process so they can grow their company effectively and more efficiently. So I really felt a sort of a burden, but also a desire to help, because there were so many small businesses that they don't get access to the tools and the processes that we were using in the corporate world for $100 billion company, right? So
Yeah.
how do we bring that down to the level and get everybody that mini education that they didn't get in school, and also help them, give them the tools in their business to use to help them grow?
Yeah, thank you. Thank you for that. And I think this is pretty amazing, being that a whole lot of blue collar entrepreneurs who are even starting multi-million dollars industry today, whether they are big or small, most of them started out as a sole proprietorship, just on their own, figure it out as you go. So at one point they get stuck, and it called for more structures, and sometimes they find it so confusing. I feel having this conversation is going to kind of add a whole lot of clarity on what that is. So many entrepreneurs think that CFO is only for big corporations. Can you actually explain what fractional CFO actually does, and why they really need one?
Yeah, for sure. And it definitely can carry, some different definitions. A CFO for a big company can get involved from everything, compliance and tax and, financial oversight, legal issues, everything like that. And they do play a bigger role in a bigger company. I've been a CFO for smaller companies and have, worn a lot of those hats. Specifically for what we do, the fractional CFO part, and it's sometimes can carry a negative connotation. I like to say outsource CFO would be the other way to think about it. But it basically means we're not working for your company full time. So the design point is for someone like me, you don't need me 40 hours a week, and you can't afford me 40 hours a week, most likely. So how do we make it work where you can get the correct tools, the correct guidance on a monthly or biweekly basis, enough to get you what you need to make your decisions and to operate your business. So we can walk alongside you, we can check in, we can be there with you as you're making decisions and as you're doing plans, understanding the numbers every month as they close, reforecasting everything, and we can give you all the data and help you, guide you on that, educate you on it, walk you through those decisions, but you don't need us full time. So that's where the fractional piece comes in. And the CFO is really what that is if you think of it as kind of like a three-legged stool. You have a bookkeeper, which codes all the transactions in your bank accounts, gets it into the basic structure of the balance sheet and the income statement or the P&L and L and the cash flow statement. So your basic financial statements. And then you have a CPA who gets involved with taxes and tax planning. Some of them overlap a little bit into, sort of financial strategy, but a lot of them don't necessarily do that nowadays. So the CFO, the third piece, is really the financial strategy person. So it's taking what the bookkeeper has done and saying, okay, the bookkeeper has established what the financials are. It's working with them and with the CPA to say, okay, the CFO understands some basic tax strategies as well. But the CFO is really about being creative and helping make decisions in your business. So we will help a business owner do a budget. So we'll help you do a strategic operational budget. We'll help you plan for vehicles and equipment that you have to purchase. We'll help you manage debt, and we'll really get it all into a budget as like, here's our plan of what we want to do, right? The other thing we do is we help track data. So we help establish like, what data do we need to track? What KPIs or metrics do we need to track? How can we measure success between trends of what we've done in the past and compare ourselves against other companies, things like that. How do we get the data and analyze that? Other things like, how do we price our products? How are we strategic in pricing our products so that we're going to maximize our profitability? Do we have different divisions or service lines? Maybe I'm a lawn care company. I do lawn mowing, but I also do soil applications or fertilizing applications. How do I analyze those two things separately so I can see, maybe one's more profitable than the other? How do I track labor efficiency so I know, what am I making on every dollar of labor hour? And then so we can look at high level, and we can understand where are you spending all your money on the expense side? Does it look like you're spending too much money in one area, not enough in another area? And we can also help dig into the data to figure out, is there, if we're not profitable or the cash flow isn't coming, where is the problem? We got to go figure out where the problem is, and then we help you fix that problem through those tools and processes. So it's really about digging into the data, identifying the problems, fixing the problems, and then also giving the business owner really confidence and clarity in their business so that they understand the decisions they're making, and they understand that they're smart business decisions because it's based on data. And along with that, another way we get business owners to focus is really on the future. So we spend a lot of time forecasting, specifically on everything, but specifically on cash flow. So we'll say, hey, we can look backwards, that's great, but we're really going to play this out into the future based on where you're already headed, based on decisions that you might make. What does this look like for the future? And we can paint that picture now so that business owners can see where they're headed, and they can make decisions. If they don't like where they're headed, they can make decisions to change that. So it's really a dynamic role where we are digging into data, we're creative and solving problems, we're walking alongside the business owner. We're not bound by, hey, this is the tax law and this is what you have to do. And, bookkeeping, again, is very kind of black and white as well. We're the sort of the creative people and the strategy people that every business owner needs in their corner to help guide them to where they're going.
Wow, amazing. Thanks a whole lot for this. And also, what key numbers should every business owner review every month to really understand their performance?
Yeah, for sure. So the way we look at it is definitely need to understand their accrual revenue. So how much did you invoice in that? How many jobs did you do? How much did you invoice in that time period? and also understanding how much cash you collected. So the connection between that is your accounts receivable. So if you bill $100,000 and you collected $80,000, that means you got another $20,000 that went into your accounts receivable. So really understanding not only how much we're billing every month sort of as the top line, but then is our AR growing or shrinking, and why is that? Are we actually collecting that cash efficiently? So that everything starts there. Everything else is based on that. The second piece is understanding your gross profit, your gross margin. And this is really the horsepower of the engine. This is really where the leverage of the company comes in, is that gross margin. So what I mean by that is you take your revenue, you subtract your cost of goods sold, which is just basically your costs of delivering your product or service. So I work with a lot of service business owners. Their main cost of goods sold is labor. So we subtract that and fuel and supplies and other things that are directly associated with doing that job, and you're left over with your gross profit. And what percent of revenue is that? And so there's definitely some industry averages and some expectations of where you should be in order to be effective and efficient. Because if that number's not high enough, it's really hard to manage expenses enough to end up with enough, at the end of the day as a net margin. So that's a big deal. On the expense side, we look at things sort of high level in buckets. We look at administrative cost of, just administrative overhead, mostly labor and office operations to run the business. Marketing, we looked at fixed expenses like rent and insurance, and then we look at variable or discretionary expenses like travel, meals and entertainment, things like that. So we really look at those in terms of where do we have ability to change things short term? Where do we not have ability to change those things? And then net income is a big thing. I should say operating profit is the most important thing to check. Those are big things. And then in terms of cash, we look a lot at cash ratios. So how much cash are we getting out of the business every single month based on all of that? And then we also look at short-term debt related to that cash flow. So how much cash do we have in the bank? How much short-term debt do we have in the bank? It gives us an idea of our short-term survival, so to speak. And then the last thing is we look at total debt on the company versus total assets. That gives us an idea of sort of long-term survival. So we do look at a lot of those profitability metrics, and then we look at a lot of cash flow metrics to see where the company's at, from a health standpoint. And then the last thing I would say is just, understanding your marketing ROI. So what are your marketing channels? How much are we spending? How much are we getting business in those different marketing channels is an important financial metric as well.
Wow, amazing. This is pretty very lovely. Also, maybe we should just dive into this particular aspect of it. So what is more like a healthy profit margin for a home service or labor-based business, and how can the owner improve theirs?
Yeah, so I would say, in general, we typically say, 60% gross margin is pretty healthy. We have clients that are upwards of 70%. We have some that are in, the high 40s or low 50s, and we try to improve it, above and beyond that. So the biggest leverage point is not understanding pricing strategy. Let's say labor, let's say you're in the business where most of your cost of goods sold is labor, not understanding how much that labor is costing you, not understanding the efficiency of that labor, and then also how it relates to how much am I charging the customer. That is, I would say, the number one issue that we see in terms of gross profit issues. So, and kind of alongside that is the data of just tracking job data. How long are these jobs taking us? How much drive time and prep time is there? How much time we actually spending on the job versus total that we're paying these employees. But just not understanding that is a big thing. So we did develop a labor rate calculator that we use that basically says, here's how much we're paying our employee. And then we're going to add in all the benefits. We're going to add in all their taxes. We're going to add in all the costs associated with that employee, which a lot of business owners don't take into account. They don't realize, hey, if I pay someone $20 an hour, it's really costing me $35 an hour by the time I add in burden and, all these other expenses. But then the big thing is, okay, how efficient are they? If they're working 40 hours in that week, how many hours are they actually billing to a customer? And typically it's only around 30, just as a general rule of thumb. Out of every 4 hours that they're working, they're only billing 3 hours to the client. They're only 75% efficient. So now we have to take that into account and say, okay, it's really not costing us $35 an hour. It's really costing us, $50 or $60 an hour. for every hour that we're charging that customer. And that's really what's counting against, the hours that we're charging or that we're getting paid on, right? So then we figure out, okay, are there materials on every job? Is there fuel? Is there other costs that we have to absorb in that pricing? And what gross margin are we trying to get to? And then it actually back solves it. It tells us, okay, you need to charge 150 an hour or whatever it is to the customer in order to be able to pay all these things and still end up with 60% margin at the end of the day. And a lot of times they'll be like, oh, I have no idea. I just guessed. Or, a lot of business owners will price because they're not confident yet in the marketplace, and they just want to be lower than the competition so that they don't have to have that conversation around price. It's easier to not to have to sell value and say, here's why I'm worth more. And so a lot of it is like pricing because they're scared, or they don't know the true data of how it comes to the bottom line. They're just seeing their gross profit is not where it needs to be, and they don't understand why. So it could be a pricing issue. It could be a labor cost issue, or it could just be an efficiency issue and they didn't realize it. So maybe they can, for the efficiency issue, maybe they can do their routes differently so they're more efficient on the routes. Maybe their employees are stopping off at the gas station to get snacks too much. They're driving around too much. They're prepping too much, whatever. But it really uncovers that. It allows them to say, do I need to change my pricing, or is there some internal things I can fix, or both? And that's, I would say, the number one leverage point that people get out of the increase their gross margin.
Oh wow, amazing, amazing. Thanks for actually like reviewing what's the gross margin to be. That really shows that the business is healthy, and it's the fact that you make reference of 60%. I think that should actually even inform every entrepreneurs, local entrepreneurs, that okay, at the end of the day, from everything that comes in from the payments, the labor, and everything, what is the net profit at the end of the day? How many percentage is left? Because from what you just said, that at least 40% margin should be left after 60 have gone for labor and the cost of running it. And it's very, very key for actually like improving a whole lot of stuff. So how you have actually helped business owner design better pricing, because pricing sometimes is key. Pricing system. So what is the biggest mistake people make when settling their prices?
Yeah, I would say, I mean, it's kind of the stuff I mentioned. So it's pricing based on emotion or just sort of what everyone else is doing or what they think it should be, and not based on data. I would say, yeah, not understanding their efficiency, not tracking the data for, especially if you have different job types that you do. Every business has different types of jobs that you do. So finding a good CRM that tracks different jobs and time spent on them and revenue, and tracks all that data so that you can look back at that and make decisions based on that. And because it could just be a couple specific services that you're offering that are really weighing down everything else, or it might be everything overall. So I would say, that's a big thing. Another thing that we try to help people on is giving alternatives to their pricing. And because even if your dollar per hour is correct, there's still different ways to present that to the client to either upsell or get more revenue out of the deal, or get them to buy the one that you want them to buy. So we always recommend having 3 options to say, hey, I looked everything over. Here's the 3 options, sort of like the good, better, best. There's a lot of psychology behind that in terms of, 2/3 of the people will choose the thing in the middle, but then you can really position it to make sure that you're making that one the most profitable. If people want to pay more for the higher one, great. If they
Yeah.
want to do the low, great. It costs you a lot less time, but you can predict where people are going to head, and you can give them options, because if you only give them one option, their default reaction is to say, okay, I either have to say yes or no to you. And if I want to compare you to something else, I have to go to another company or two and get pricing from them. Now I have the risk that I lose that deal, right? But
Yeah, so true.
if you give them 3 options, you can say, hey, option A, B, and C, which one do you want to do? Now they feel like they have a comparison point and they get a choice, and either way you're winning. But you can show your value that way, and you can give them that option, and you can then sort of not force them, but really give them not a reason to go outside and get bids from someone else. So that's another, tactic that we kind of work on to hone.
Yeah. Yes. Such that is very, very lovely, because I just remember more like I run more like cleaning, industrial cleaning, and this particular system has worked for me, being that most times I can just get to site. I'm like, okay, this is going to be the cost it take to actually like do the full cleaning of this particular house. And the client is like, it's too expensive. I'm like, okay, we can remove the windows without cleaning the windows. We just do the cleaning of the basic other stuff. And depending on the price, they make reference of. And also we can say, okay, we might not need to clean the sofa. We might not need to clean this particular part. And then it just remove the competitive nature of what their pricing is going to be like. I mean that yeah, they can now focus on what their budget can fit in. At the end of the day, the business stay
Right.
profitable.
Right. Exactly. Yep. For sure.
Yeah, thank you. So many blue collar entrepreneurs face seasonal ups and downs. How can they plan ahead to stay stable? Oh yeah.
Yeah, that's a great question, and it plays into a lot of what we do. Forecasting is a big thing, and really being a master of your cash flow, right? So a lot of times, newer business owners, they in general realize that their business might be cyclical, whether it's seasonality based or for some other reason. But there's always going to be ups and downs. So really understanding, first of all, you have to get a good foundation of understanding cash flow. And so, kind of as a side note, one of the things we're developing, if people aren't ready to work with us directly, is just an educational platform, a set of videos and education so that people can get a basic business understanding of the financials. If they didn't go to school for it, they can go through and they can understand a lot of this stuff, right? So really, we're trying to get as many people to understand the basics. Even if you're working with a fractional CFO, it's good to understand the basics of how cash flow works, how the timing works, what affects it, what makes it better, what makes it worse, things like that. So really getting a basic understanding of how cash flow works is key. Second thing is making sure you are putting aside money for taxes all the time, and you are forecasting when that cash is going to get down and when it's going to go up, right? That's really the important of forecasting, is say, what is our revenue going to be? What is our expenses going to be? When do we expect revenue to sort of dip? And when is that cash flow crunch really going to happen? So if you do a forecast, you can sort of see that ahead of time, like when it's going to dip based on your past financial data or based on your future expectations. And then you can deal with it accordingly. Do I need to offer a different service where I can make some money during this time? Do I need to take out a line of credit? Do I need to lay employees off? What do I need to do to get to improve that cash flow crunch so we don't get into an issue? If I have debt, and payments that I'm making on debt already, what do I have to continue to make through that time regardless? So really forecasting is key. And then also looking at a couple different scenarios to say, okay, if everything goes really well, here's what it's going to look like. But then also saying, okay, what happens if we don't get as many sales as we think? What happens if this happens? Running alternate scenarios sort of side by side to say, here's sort of best case and here's worst case or more realistic case. You can kind of get an idea of how am I going to deal with it in either situation. If I see this happening, great. If I see this happening, I need to make some different decisions. But it's really understanding how the cash flow works and then forecasting that out ahead of time. So we typically do it on a month-to-month basis as far as that cash flow forecasting goes. But there are also other tools. We have one, otherwise, you can just Google it, but they have 13-week cash flow forecasting tools, and that equates to 3 months. And it goes week by week, and it actually will say, okay, how much do I expect to collect? What are all my cash payments? It's not my profit and loss. It's not my income statement expenses, but what are my actual cash inflows and outflows week by week? If I really want to get super detailed into a certain time period where I have a cash crunch, and then you can really see where things are going to happen and when it's going to be good, when it might get tight. And then you can start to move things around, like, well, maybe we don't need to pay that right then. Maybe we can move that out a week or two. So we see this a lot with newer companies or with turnaround companies that are in distress, is really managing that cash flow and really manipulating that, moving things from week to week to try to keep everything in the black. So that's the biggest things. You need to understand it, you need to forecast it, and you need to do scenarios to say, this may happen, but this also may happen. So let's run a couple different scenarios to see what the difference is going to be.
Yeah, this is really amazing, especially the financial, more like the forecasting. I think it's very, very key, especially as a blue collar entrepreneur, being that you have a whole lot of persons depending on you, depending on your business, and yeah, let's be realistic. Sometimes you don't get couples of jobs for some time, and there's a week you get loads of them that you could actually even forbid. and having more like this particular tools where you get to analyze what are what. I think in a way it just make it dawn on you that I have to reduce my spending so that at the end of the day you wouldn't run out of cash in running of the business. And
Right.
yeah,
Right.
and actually more like keeping all the staff and every persons in place. And this is really good. So what are the warning signs a business is heading towards financial trouble? And how can owner act fast to turn things around?
Yeah, I would say, I mean, I think the statistic is like 80% of small businesses fail because of cash issues, right? So that's why it's in our name. We rebranded. We're called Cash Flow Copilot now. We rebranded a couple months ago, but we really value cash flow as sort of the number one indicator because that is a reason why small businesses fail. They could be profitable, but if you don't have cash, then you're not able to pay salaries, you're not able to buy supplies, and you're not able to pay for the things that are needed to actually execute your product or service, execute your business. So cash really is king. So one of the things that we see is lack of cash management or just the fact that there's constantly cash issues where now we're having to borrow at potentially higher interest rates, or we have to, make some more drastic decisions like selling equipment or laying people off just to manage cash. But then when when there's business that needs to be done, we don't necessarily have the infrastructure we need to execute the business. So you kind of get in this roller coaster of then, okay, now I got to go buy more equipment, hire more people, I got to do training, which is costly. So you kind of get in this roller coaster. So the cash stability is definitely a huge indicator of a steady business. The recurring revenue, if there's recurring revenue, that's a great sign. That's a lot that you can do with that. If you have recurring revenue coming in, there's a lot you can do with that. But when a majority of the revenue is sort of one-time sales and it's seasonal, that definitely it's very taxing. It's very difficult on the cash flow. So cash is definitely, a number one thing. A couple other signs is spending a lot on marketing and not seeing a return there, not seeing a profit there. Very aggressive expectations of sales and really high administrative labor spending. So we've seen businesses that they're spending 25 or 30% just on administrative labor and overhead, and that's just it weighs down the business so quickly, and it's not really sustainable. Or spending a lot of discretionary money because there's expectations that the business is going to do really well. So lots of travel, lots of classes and business coaching and events and all this stuff, meals and entertainment and hotels and a lot of spending just because, hey, I'm going to get myself out there. I'm going to do all these shows. I'm just going to, all this stuff is just going to fall into place. And it's like, well, we have to make sure that the revenue is there first. We have to make sure it's sustainable before we go spend all this money, right? So those are some signs. It really comes down to profitability and especially cash flow, just the stability of those and a stability of the revenue stream. And you can kind of tell when those things are starting to head south, and then it's like, okay, we have to figure out what is the true nature of what's going on. Are we not offering the right product? Is our pricing not correct? Where are we not connecting? Is it a marketing issue? Is it a sales issue? Or is it just specifically an expense issue? We're not right sized with where we're spending our money. Because all those things at the end of the day end up affecting cash flow one way or the other. So it's really about, again, able to identify the issue quickly and start dealing with a issue or issues quickly so that we can turn the thing around as quickly as possible.
Wow, identifying it quickly and knowing when to turn it around quickly. I think it's the statistic he gave to which shows that 80% of our business actually more like fallouts owing to cash flow crunch, and I think it just speaks volumes to the mindset that every entrepreneur who's starting out should be looking forward to. Being that if there is no cash flow running the business, it's as though the business out of line. Being that there's a whole lot of things that need to be met. There's a day-to-day running of the business that need to be kept on and on and on and on. I think this is another way of saying that every business should learn a way more like, how will I say it? Will I say lean in a way of spending, in a way of actually more like doing a whole lot of things? Because when you were making reference of it, you said that traveling, training, some of those things that are not, might not be more like the real thing that bring a way of getting more deals or making things better. If those things, they don't actually add more. I feel there's no need of actually more like spending much on those things so that at the end of the day, you have cash to run the business on and on without having to kind of run bankrupt. So when should a small business consider hiring a fractional CFO, and what kind of results should they expect?
Yeah, I'd say the sooner the better. So definitely, priority when you're starting your business is, and some issues that I've seen when people don't do this, get your when you're right starting out, when you're first starting out, get your business accounts separated from your personal accounts. So we still see a lot of small business owners that are using personal credit cards for business or personal bank accounts. Get everything separate right away. Get your most likely an LLC established or something like that, but just get everything separated. Invest in good bookkeeping. So don't try to do this yourself, but hire someone that's knows how to do bookkeeping, can get your numbers correct, get all that, solidified. We do bookkeeping as well, but just make sure that that's done. And then really set up your systems, get us again a CRM that's going to collect a lot of good data for you, really establish your pricing and establish processes in your company so that you can make decisions on data, because a lot of people will make decisions on gut or like how much money is in the bank account. So really get some of those basic things established right away, your processes for saving for taxes and paying your bills and things like that. So just, those are all the sort of basic blocking and tackling you have to get set up. As far as hiring a fractional CFO, I used to say it was, when you kind of grow above maybe $250,000 or $500,000 in revenue, and then you can bring someone in and it makes more sense. We did recently just create some different tiers so we can try to engage people earlier, because there's a lot of benefit to having a fractional CFO. Even if you're not doing everything with them that a $10 million company would do, there's benefit to starting to making sure you get a budget in place, make sure it's correct, make sure some of your pricing is correct, making sure you're tracking the right numbers and understanding what they mean and how to make decisions off them, trying to get a basic forecast in place and understanding where you're headed. But just trying to start to work on some of that strategy in your initial growth phase, even before you have a ton of employees or a ton of infrastructure, just really getting things right. So we really started to tier things to say, hey, let's make it let's make this beginner tier that's a lot less expensive, you know what I mean, a lot less of an investment, where it can help people establish some of those basic things. And then as they grow, now we can get more into analysis, strategy, deep diving into different areas of the business to get more strategic, start to talk about how do we compensate employees. Now we have more employees, we have to compensate them, deeper pricing strategy, tax strategy, growth strategy. Maybe I want to offer a new service or expand, things like that. So the short answer is, as quickly as possible. I'm always willing to help people out. We have tools, and I'm always willing to spend time with people just to point them in the right direction, even if they don't work with me on a monthly basis. But just to say, hey, I get it. Like, it's hard when you're starting out. Here's some tips. Here's some things I see that you got going on. Like, go spend some time on these things and some of the stuff they can do themselves. But just to start that conversation. And again, with our education platform, we're going to try to say, hey, here's a way to get bunch of knowledge that you can go through and do it yourself, whether you're embarrassed or whether you can't afford, having someone come in full time. It's a nice entry point to say, I'm going to learn a lot of this myself, get things set up correctly, help me grow to the point where then I can bring someone on, on a monthly basis. But definitely have that discussion. If you are just starting out and you're not sure where to go, have that conversation. Or if you've gotten to a certain level and you feel stuck and you're like, hey, I'm doing $1 million, $2 million of revenue, but I can't get beyond that. And I feel like I'm just spinning my wheels. I feel stuck. I don't know what to do next. I don't know what's going on. My profitability or cash flow is not where it should be. I don't know where to go. And I don't know how to identify those issues. That's another big sign where you're like, okay, I need to bring someone in to kind of get me unjammed and really, give another set of eyes to it and help take me in a new direction. But yeah, in my experience, it's valuable at every stage of the business, from, when you're starting to, again, 10 million and beyond, because the larger you grow, the more problems you have, and you have different problems and you have different things that you need help with. You never outgrow it where you're like, okay, I'm good now, I know everything. It's like, well, no, now I have all this other stuff happening that I didn't have to deal with before. How do I incorporate that, and how do I, so you always need that person alongside of you. So again, back to sort of our new name, Cash Flow Copilot. When you're on a flight, you're always going to have turbulence. You might have turbulence at some point. You might have some turns you have to make. You might have different data that comes in. And if you're flying the plane, you're never like, okay, I got halfway there, like, I don't need a co-pilot anymore. It's like, no, they stay with you until you land the plane, because different things will come up and you never know what that's going to be. And so it's really about the journey, kind of walking alongside a trusted expert in the financial side, from start to finish.
Yeah, thank you, Justin, and thank you for your advice in respect of it. and how they could do it different, even if they don't have the total midst of doing it yet. And I think I love the fact that you pop actually more like created a budget, created more like a structure around this, either they're in a quarter millions or half a million, and that of a million, they're more like package available for every blue collar entrepreneur who's willing to actually more like jump on the offer. So finally, if a listener is feeling overwhelmed by their finance, what is the first simple action they should take today to get back into control?
Yeah, I would say keep it simple, right? Like really I would say if you don't have like an operating system or sort of a, on the non-financial side, but it's sort of an operating system, a cadence in place for your company where you are meeting with your employees on a regular basis and you have metrics, you have people accountable for certain results in your company and you have metrics to track those on a basic scorecard. Get that in place first. So figure out I'm gonna find maybe 5 to 7 metrics that I'm gonna track, and I'm gonna track them every single week, and we're gonna have people accountable for everything. The hardest part is determining what those 5 to 7 are, and they're a little bit different for every company, but some of them should be around sales and marketing. A couple should be around revenue and cash flow, and then a couple should be around operations and just really getting those established so that you can see trends of whether things are getting better or worse. And you can identify, is it a sales thing or a marketing thing? Is it an operational thing or is it a financial thing? And having people accountable to those and identifying those trends, but really keeping it simple. You can do it on a Google Sheet. You can do it in Excel. They have, I really like the EOS platform. So they have like 90.io. They have softwares that are pretty inexpensive that you can have people enter, data like this, but really developing that cadence and developing a basic tracker for simple metrics that you can identify, are things getting better or worse? And it helps you identify issues quickly to deal with them. So I would say that's the biggest thing. Second thing is just making sure you have bookkeeping in place. So again, don't try to do it yourself. You know what I mean? If you're smart enough to hire a CPA or hire someone to do marketing for you, don't try to take on the financial piece by yourself and the bookkeeping. It might seem simple, but there's a lot of nuances to it. So make sure the bookkeeping is in place. Make sure that you have up-to-date, correct financials at any given time so you can go look in at your financial statements in QuickBooks, wherever they are, and you can quickly see where everything's at and you can know where everything's at. Some of that can help you in your little tracker, but just to review those on a weekly basis and really get fluent with your numbers. Even if you don't know how to fix things or how to forecast or anything like that, make sure that bookkeeping is in place. And then the last thing is just make sure you have a budget. And again, back to keeping it simple. It doesn't have to be extravagant, but really try to figure out there's 2 ways to do it. The first way is you can start out with your revenue and kind of work your way down. The second way, which I like, is, hey, what do I really want to profit from the business? What do I actually want to end up with? And then I'm going to work my way back up to say, okay, what are my expenses? And then how much revenue do I have to do to actually get there? That's another way to do it. But just get a basic budget in place, even if it's 5 to 10 line items, whatever it is. Get something which you can track your actual performance against. Here's my Some people don't like the word budget, but get a plan in place, whatever your goal is. Here's where I want to end up by the end of the year, and something you can track yourself against. So then you can say, are we sticking with it or not? Because a lot of people, they won't have the budget, or they'll change the budget so often that it's like, I don't know if you play, soccer, football, whatever, but it's like
Yeah.
moving the goal. It's like moving the goal and then, oh, the ball's going that way. I'm going to move the goal. So I feel good because I still made it. And it's like, no, that wasn't your original plan. You're actually not sticking to the plan. So you have to have something that's you establish. It's simple. It's not changing, but you have to determine, am I succeeding or failing against that? And then you have to track the weekly things with your team to understand, okay, underneath the covers of the financials, what's succeeding, what's failing, and who's accountable to that. And then the bookkeeping kind of ties it all together so you can get those financial numbers. But again, that might even sound like a lot, but it's very simple, and it's the basics of understanding and documenting the financials of the company, making sure it's accurate, it's timely, and you take out the basics, the most simple things of what you need to see if you're succeeding or failing. And then everything else can be, added on from there. But that as a business owner, you definitely need to sort of be the master of that domain. So, yep.
Yeah, amazing. And thank you so much, Justin. I'm glad we're able to have this conversation. So, for my audience who want to connect with you, who want to do business with you, or want to learn more about you, where is the best platform to actually do this?
Yeah, so our website is yourcashflowcopilot.com. We have Instagram, we're not super accurate with, but it's cashflow.copilot. And then you can always email info at yourcashflowcopilot.com. We also have Calendly link if you're, it's on our website too, but if you ever want to just set up a meeting, it's calendly.com/cashflow. Yeah, that's the best. I'm on LinkedIn as well. I'm on Facebook. The Cash Flow Copilot's on Facebook, but those are all good ways to get a hold of us. The website's always a good place to start, and that should lead you whichever direction you want. But yeah, like I said, always willing to chat with people and help however I can. Yeah, we're excited about the new education platform. I think that's going to help a lot of people as well, just that may not be ready for the full consult engagement yet. So, yep.
Thank you so much. So this conversation has been a masterclass in money, clarity, breaking down complex finance into real practical steps that every business owner can apply. You have shown us that confidence comes from our understanding, and that when we know our numbers, we can make better decisions, build stronger team, and grow with peace of mind. Just to thank you for joining us and for making finance something every blue collar entrepreneurs can master. And to everyone listening, to anyone listening, remember, you don't have to fear your numbers. You just need to learn their stories. This is the Aro Benaiah Show, where skills meet strategy and hard work build legacy. See you in the next time. And once again, it's really a pleasure having you on this show, Justin.
Thank you. I appreciate it.
Yeah, thank you.